Okay, traders, welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, April 12th. Excuse me. Great to be with you guys this morning. Happy Thursday. Good morning to you, Jay, Tom, Peter, Pete, Mark, Chris. Great to see everyone in the room. Hey, Shen, great to see you as well. So, as we wind down the week, finally starting to get these big moves. If you guys haven't noticed, the first couple of days of the week have been sort of like the laggard of volatility for last couple of months. It's been like this, and as we get into Thursday, Friday is where you usually get most of your kick in the action. That being said, we have seen the dollar turn, break near-term resistance, so that's on the move up, targeting next subsequent levels. We'll talk about the DXY. Euro CAD, Sterling CAD, those I'm sort of falling out of love with. I know we talked about those last night, but at this point, they're kind of dropping down deeper into support, and you don't really want to mess with them too much. So we'll take a look at both of those, as well as dollar Swiss. We were looking for the opening range for a downside break. That broke to the upside today, so I don't know what to do with that either. We're going to kind of shelf that for now. Aussie dollar still holding near-term range. Dollar CAD taking out that last target last night, showing some divergence on that. Again, not going to chase that any lower from here as well. Sterling yen, right after we reversed off of huge key resistance, we reversed today, last night again, heading right back into the highs here again. So we have to revisit that. Take a look at euro yen, dollar yen, just for reference on where we are. And obviously, euro, we're obviously still actively in a trade there on the short side. Really nice entry last night from Jamie. So that one, we're targeting just a little bit lower towards 22.90, but just even ahead of that for the euro, just to show you real quick on those levels, 22.76, 22.80, 22.84 is where the cushion of support is. Okay, that's going to be the 618 retracement of this near-term advance. So that's so far the April range. And then you also have the outside day reversal close that we made at the lows here. So that level all converges right at 22.79. I think that Jamie has our limit at 22.90. So just keep that in mind. As always, if you have any questions or trade setups that I did not address or you didn't hear mentioned, feel free to throw them on the message board at any time. Shen says, hey, Mike, your last Foundation of Technical Analysis webinar is excellent. Thank you, sir. Always learn something new when you walk us through examples on how to time entries and exits. Can you please cover Aussie Kiwi today? False breakdown of support. So let me write that down for you. Aussie Kiwi for Shen. First of all, thank you for your comments there, Shen. I'm glad that that's been helping. I would do that every day with you guys if we just, if we had like 4 or 5 hours in the morning. Otherwise, we would only get through 1 or 2 setups a day. But I'm glad that helps. And whenever we have time or there's a specific trade that looks imminent, feel free to shout it out. So I guess let's go over the DXY first. You guys have all seen these charts before. The reversal or the turn that we were getting this week seemed to be in line with what the analog is saying. We can't dispel it or invalidate it just yet. But just looking at this again, we really want to preserve the high that we made last week if this is going to follow suit and give us that last dump into the lows. So not getting too excited on the DXY upside just yet. I am looking for near-term resistance. Here's what the daily chart looks like. Remember that support trigger that we were talking about earlier in the week in the webinar, and I said this looks pretty precarious. It looked like it had broken. Then yesterday's close, when we pull back, basically recovered. So we didn't get the daily close on the trigger break to the downside. And obviously, we're looking still for a possible drop into that slope support or this confluence region here. Now, if we break back through the monthly open, it would suggest there's something bigger amiss here. Get rid of that gap. Okay, right here. So I'm going to be watching the close with great intent here. I do want to see the monthly open hold as resistance. Here's what it looks like on the intraday charts. Okay, on DXY. Here's the upslope that we've been following since the advance off last February's low. There's a 50 line. Support, break, acceleration, resistance, break, acceleration, support, break. Here we are again at resistance. So tack on a quick retracement of the near-term range since we have a concerted low in play with that reversal there. 50% retracement comes up on the 38.2. So we're at 89.98. Okay, the monthly open is right in that region as well. 89.97. Okay, so looking for this advance, if it's gonna fizzle out, this is where I want to see it fizzle out. Okay, if this is just a corrective rebound and there's a bigger decline at hand. Otherwise, past 88, let's just call it 90. It's anyone's ball game at that point. Okay, you're basically just set a very larger monthly opening range, and you're sitting right slap in the middle. So dollar could see a little bit more upside, but ultimately I'm looking for this kind of get a little bit tired. I told you last night in the update, I'm not really fond, guys, just as a general rule of thumb in your trading, I'm not really fond of using these real near-term downslopes, these real sharp downslopes. They tend not to be very fruitful. In this specific instance, it was. Obviously, the break of that near-term downslope did fuel the rally and overnight trade. But as a rule of thumb, you kind of want to approach these with a grain of salt. I've seen these a million times where they drift out, then break lower. Obviously, sometimes they materialize pretty well. We were going in some ongoing, it wasn't really divergence per se, but we had already recovered last night when I was writing this back above 70 or back above 30 rather. So the momentum signature was showing that the threat of the reversal higher. So I thought it was prudent just to keep that in last night. But in general, be cautious about using these real steep downslopes. Now, euro dollar had the same exact thing. No surprise, right? The inverse of DXY. But long story short, momentum is heading in 62 right here on intraday. I want to see resistance start to hold ahead of 90 if this is going to maintain the downward posture that we're looking for. Also, objectively speaking, the initial monthly opening range for April, here's the open low, pushing to a high. You rebounded off the monthly opening range once, so it wasn't the biggest test, but there's the break. Here's the retest. All right, north of 90 on the DXY, I think you got room to spread your legs. On this immediate advance, I think it looks a little bit tired here heading into the 90 level, so watch for some resistance here in DXY. Any questions there? Number one. I guess we should just jump right to the euro, number two, if there are no objections. Here's what euro looks like. So similar, right? No surprise on that front. Euro's big on the weekly charts. We've seen this. I've showed this to you every single day. The close of this week will be paramount. Okay, we can see that upper median line parallel, former slope resistance, now support has offered support since the break early in the year. Bullish invalidation for the broader breach would have to be 2167 on the bigger picture to give us a bigger spill down. Right now, that's not our play. Right now, we're playing a near-term play just into support. As I said yesterday in the update, guys, the market conditions are such where you want to be super nimble. Okay, I don't think you can look at this with any type of certainty and be comfortable sitting in a trade for too long, right? This is the weekly charts, and you're going nowhere for the last 3 months. So, super nimble is the game. Super nimble is the game. Scale in, scale out. Here's the euro dollar on the daily chart. Okay, daily chart. Ultimately, we're looking for a rally towards the 2018 high day close, 2409. You guys know that. The high close that we made from last month, right around here, 124.40s. We've been talking about both of those levels ever since the break here. So on the pullback, we are now testing monthly open support. Downside break is looking at that region that we were looking for in the target for the short side swing. And that'd be 2290 into 2280. 2280, again, being the outside reversal day, low day close. And confluence support with both trendline support off of the November lows and all the way back to the April lows of last year. So some nice symmetry here coming back into that same level. Okay. Questions on euro? Here's the intraday chart. Here's your weekly open. There's the outside low day reversal close. 618 of the near-term range turns out to be 2284. So 2284 and 2280. It's your confluence level. There's that November slope line that we were just talking about in the daily chart. So keep that in mind, okay? I want to look at this for a second, since you guys found this so useful on the 30-minute chart, and just to really get a fix to see if there's anything here from a slope basis that can guide us with this near-term setup. Okay, it's too gnarly for me. Hold on. Not comfortable enough. Not comfortable enough. Let's just see what basic slope support looks like. Okay, so even when you see something like this, it sees this break, and now we're testing the underbelly. This is typically a tell as well. And I'll tell you why I think you could get a little bit more of a rebound off this near term. So if you didn't catch that swing yesterday, maybe you get a shot to re-enter again. Okay, it's pretty clean. Huh. Slope. It's all about the slope. Support, acceleration, resistance, acceleration on both sides. Not really a major line, but we'll call that a secondary parallel. Long story short, some things to take note of here. Okay, so you see this pivot along this slope right here with the break to the downside. Very nice, or very often when you do see a near-term recovery in price, something I'll look at is when you see those pivot breaks and those pivot points end up being reference points on a RSI divergence signal. And that's basically what you got. It's very slight, right? But this high, lower, a higher low, right? Price action, real subtle, but a big discrepancy in price, and both of those pivots on either side of this. So if we break back above this, and at the same time you get like a basic resistance trigger break in momentum, that would suggest you got a little bit more of an upswing. Worth taking a long? Probably not, in my opinion, because I do think this thing inevitably does sink into support. But the advance could offer a little bit better of an entry to try to get back into that last swing towards the lows. Don't get too aggressive on this trade. Okay, don't get too aggressive on this trade. If you're playing along with the swing side of things, all things held constant, we're on point, no change. Obviously, we brought in our stop to break even earlier this morning. So if you didn't see that tweet, we are break even on euro. But don't be too surprised if you don't see a little bit more of an upswing here, just based on what we're seeing in momentum, based on what we're seeing in near-term price, slope. Wouldn't be surprised to see a little bit of a recovery. Don't need that. And too premature also, but if we do pop back above that parallel, hey, 236 comes pretty close to where that 100 was, 2330s. Yeah. Okay, it's too early to work with that retracement. So just a near-term picture for anyone who's looking for some opportunities here intraday. Broader picture still looks lower. You're coming into some near-term slope support, which could offer a rebound, but areas of interest, 2305 and 23. Might see a little hesitation there, but the big area of support that we're looking for would be 2284 into 2280, okay? Obviously, our target for the swing trade is at 2290. Any questions on euro? Here's the 60-minute. All right. Going once, going twice. Let's keep with the euro theme here. Here's number 3, euro CAD from last night. So we've been following this one for a while. Well, we should come back to dollar Swiss in a moment. Here's euro CAD. So the idea here was, listen, the downside targets were 55.31 and 54.86, right? These last downside targets. So bearish invalidation, 56.40. I think it's 56.60 or 56.50 is what I noted. 56.44 and 56.82. Okay, both pretty big levels on the upside as far as the weekly open is concerned. That would be the bearish invalidation level for the break to the upside, but could have seen a little bit of a swing. Sure, still within the confines of the downtrend. Here is EuroCAD. If I can find it, there we go. Okay, so 55.31 got taken out. You got a little bit of an upswing, an overnight trade. Momentum, look at that. Perfect reversal right ahead of 60. And here we are making, dropping into, or trying to make an attempt into 54.86. Look, you know, if you noticed yesterday, I have these two slopes in mind. They're both based off of just 2-point reference points for the initial origin of the slope. So here's one, the parallel off the low here. Saw 1, 2, 3 touches as of last night. You know, you can gauge that for what it is as we open the markets. But here's another one. That slope, you know, a parallel extension rather off that low. Highlighted this yesterday. So at this point, this is still just a fib reference level, 54.86. Not even. It's a 50%, just half the range of the advance off the lows that we made in January. So short side's getting tired, long and short of it. Okay. Here's what the daily chart looks like. 54.86 also ends up being an interesting median line for a large formation that we've been watching. Okay. And it turns out right here. So, you know what I mean? Momentum. You've had a couple of down days in a row. I'm just cautious about trying to chase this any lower, even though the euro is turning over pretty decently today. Here's what EuroCAD looks like on the weekly charts. Okay. Is that 50%? Fourth consecutive week. Checking 3-point touch trigger support in momentum on the weekly chart. So again, the weekly close will be paramount here. So nothing. I haven't really been active on this one as of late since. So at this point, you know, you can't chase the short side. You can't try to fight it. If you get some exhaustion here and you get that tag in the 54.86, I would be looking for some more upswing. Okay, you'd be looking at the first target right at 55.90, right where my cursor is. It's last week's low. It's the overnight swing high. Bearish invalidation still has to be steady at the weekly open at 56.82. A break lower from here, and you're basically off to 53.30s. Probably a decent pivot here you'll want to pay attention to. $53.75, 53.30s. That's on a downside break. Again, this has been a pretty decent and pretty sharp decline. You know, at the end of the day, if we were to break these targets, guys, this would be the break of a descending formation. Typically, that's a washout. You know, you'll see this thing just completely massacre the long side. So don't get cute here and try to fight this just yet. You are coming into some structural support on EuroCAD. Similar situation with PoundCAD. You know, it's both the CAD players were pretty big in that beautiful reversals earlier in the month, right? Or earlier last month. Both of these trades came off of huge resistance targets. PoundCAD was even cleaner on the weekly charts. This thing was just like phenomenal, right? 50% retrace of a multi-year range. You have near-term upslope resistance, long-term upslope resistance, momentum breaking back from 70. Here's a trigger break as momentum's coming into support. So again, you're coming off of big uptrend resistance. It's coming into initial uptrend support. It's going to be make or break for both of these pairs over the next couple of days, EuroCAD and Sterling CAD. So Sterling CAD's support area of interest needs to be 78.53 and 78. Well, 78.54 is going to be the highs that we made for last year. The reason I still have 77.36 on here is not just because it's a 38.2 retracement of the range, guys, which is, you know, whatever. It's a consideration to keep in mind. But it's also pretty damn close to the close that we made for the Brexit massacre, right? That close came in at 77.32. So both of these levels I would just deem, you know, I'd respect, okay? The high day close for last year comes in just below that. The high day close was 77.05. So any way you slice it, a big pivot region in price. Curb your expectations for the downside here. We'd have to see a material break below that to keep this thing going on pound CAD. Here's what the intraday charts look like. So we haven't quite made it into that basic 236, but again, here's the highs from last year, and we're scraping those highs now. Okay, intraday. Same slope. Remember the break that we talked about earlier this week? False break, pull us right back. Took out those last final targets before, where's your, right here. Okay, so here's where we were last night. Initial resistance we were talking about being at the median line, at the 50 line. We're breaking that right now. Okay, I think I wrote 78.80s. Yep, 78.80s. So we're breaking that right now. Bearish invalidation for the near-term trend still is 179.34. That's what this is up to. As long as you stay below that, I don't think you can call this a turn just yet. If you do get the reversal break with that break above 660 here, which we're attempting to do, you'd look to play recovery. You'd look to play recovery. This has been a very clean multi-month, I wouldn't say multi-month just yet, multi-week descending pattern. Very clean. Divergence, we were talking about that into the low yesterday. Here's the pop higher. If we're going to head lower, this is where you want to see it hold for the drop into 77.80. If we clear that, you have to step aside and let the chance for this thing to give us a little bit more of recovery. Interesting shift that you're seeing here for pound CAD. All things held constant, could still be a pop into 79.34 before the last drop, but we'll have to see how price reacts as we get that. If it fizzles out here to the close specifically of Europe, okay, and you start to get the pullback, if you get a stop against this high, is the only short play I'd make. Again, initial targets on such a play, 78.54 would be the first level. Key support, at this point, you want to bring that up to 77.86. Any questions on pound CAD? I know both these pound crosses, both these CAD crosses are pretty interesting pairs that you don't typically see talked about too much, but the opportunity is there. Okay, last but not least from last night's update, dollar Swiss. Frustrating. This reminds me why I don't trade the Swiss. Here's what it looks like. You know, we got the turn. Okay, we talked about that. You know, you had a decent outside day reversal early in the week. We talked about that right on Friday, or that was Friday. We had an outside day reversal just right ahead of the 200-day moving average. Okay, the pullback came right into slope support. So the targets that we noted here on the 8th, we actually did make it through and take it all through all those down. So we took down the March high day close. We took down 95.40, dribbled right into here. We kind of held up when we recovered. And when we recovered, really brought into focus just a basic break of the weekly opening range, right? And that's what we were looking at yesterday. Here's your weekly open, set a high right into resistance. Here's your weekly opening range low into support. You look for that break. Ultimately, the ideal play with the momentum signature as it was yesterday was that this recovery, you'd look for the support break for us to break lower, right? That's being with the dollar weakness and such. Well, it plowed through 96.13. So at the end of the day, you made an objective break of the weekly opening range. Ain't worth fighting this at this point. You got 96.55 on the upside, that 200-day moving average. Still a focus there. Wouldn't be, you know, chasing this on the long, as I said. You're in overbought. If you are holding longs and you caught that turn, the high comes in right here, okay, 96.50, 96.49. But the 200-day is 96.54 at this point. Let me move that down. And that's what the initial target was on that stretch that we were looking for last week before it failed. So look, you know, the high close comes in at 96.35. You have that marked here on the daily chart. Another one of those trades where you can't really do anything right here. Hello, Michael. Please can I have a quick update for gold? It always struggles at uptrend resistance. Yeah, E-Man, because it's still in the broader range, right? Yeah, so let me write down gold for E-Man. We'll definitely take a look at that. Okay, so let me pick up the pace here. Anyone trading this? Any questions on dollar Swiss? The bet was to look for exhaustion ahead of 96.13. We were wrong. It ripped right through. So no change here. Levels remain unchanged. You're still looking for a possible rip into the 200-day moving average. That's sort of the next fueled up break you need to see. I'm still more of the mindset that the monthly opening range is preserved. You look for this thing to fizzle out in this region. Okay, at the end of the day, though, we were trying to call a break of this formation. It's still pretty darn clean. Moving right along. That's dollar Swiss. Let's hit Aussie real quick. Here's Aussie dollar number 6. Boring. Nothing really to do here. You guys have heard the spiel for Aussie, right, this week. Does anyone have any specific questions on this? I want to start to move a little pace here. So we're working under the broader premise that Aussie is coming off of some pretty big levels of support. Return just pips ahead of it. This is still the big region of resistance we've been talking about since the start of the week that's needed to really validate the reversal. All things held constant. You made a big reversal candle just ahead of support. Here's resistance. 52-week, 200-week moving averages. Last swing highs from last year's opening range. Decent pivot in price. Watch for a weekly close above that. Daily chart looks like this. It'd be kind of hard to believe this would be it, and you just collapse lower. All things held constant. Again, you're basically looking to buy pullbacks above the weekly open, or above the monthly open, 76.90. Still looking for a possible stretch into the 200 and 38.2 retracements. Obviously, we talked about the divergence into the trigger break, fueled the upside, but this could be it for now. So how do we curb our expectations? That's where the near-term charts come into play. Puja was was nice enough to help us identify this slope earlier in the week, and it is still kind of what I'm working with on whole. We got those swing highs at 77.26 is kind of where I want to see near-term support. We were talking about that yesterday, but we haven't done anything since. And the upside range target never got struck either. 77.80 and 77.87, 1618, 50% retrace, former swing highs, slope resistance. Get out of this range. Get out of this range before you do anything. If you're not already holding exposure. If you're holding this short because you're trying to fade this, go break even if not against the highs. You're still looking just for a touch of the median line. Don't go, don't necessarily target into 77.26. If you're looking for the rebound play, I don't think you have the conviction for that just yet to jump back on the long side. So super boring over the last day or so, but look for a resolution of this near-term range in Aussie. That's number 6. Number 7, dollar CAD. Dollar CAD takes out our final target at 25.82. Remember last night we were, just pips. We went over Euro CAD, we went over Sterling CAD, Aussie dollar. We just talked about no change to any of these levels from Aussie. Dollar CAD. Here is sort of the chart that we were looking at yesterday, or this was on the 10th. Obviously, the last level, 25.86, we talked about the fact that we had convergence of slope there. It's a 618 retracement. And while we're looking for support, momentum was still in oversold. So no trade try to fight this. Here's where things get interesting. You get the last stab into 25.86. It's a 618 right off the bat, right? So in and of itself, you kind of give it some merits. You have the confluence of basic slope resistance. This is a 3-point touch. Okay, parallel extended off the lows gives us that touch. There's the other touch. Both of those were made on divergence. Weak divergence, right? Because it's below 30, but divergence nonetheless. Here's some interesting price action for the reversal. Momentum well back from overbought conditions, from oversold conditions. Near-term trigger off the high puts us right here. As I noted yesterday, no change to any of the levels from yesterday, by the way. Near-term resistance still 126.35, 126.85. Bearish invalidation would be 27.30. I'm not sure if we get all the way up 27.30, but I do think you get a little bit of a recovery here in dollar CAD. So first level of, finicky level to pay attention to, let's call it, is still right here. You have your 200-day moving average. You have the 100% extension. On the daily chart, okay, you have the 50 line for that broader slope that we've been following from the highs we made in 2016. That median line, resistance, 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 break, acceleration, break down, all converge right there with the 100% extension and former swing lows from last December. So, make or break, right? The pivot break above this with the momentum profile as such would have me looking for near term as demands higher. Ultimately, that would offer better short positions well below 26.85. That's our line in the sand where we kind of want to see this thing hold. You got the 100-day moving average, 50% retracement, former swing highs from February, just a decent pivot in price. Any questions on dollar CAD? I've seen some phenomenal CAD strength over the last couple of days, but dollar strength today sort of bucking this a little bit. And you're seeing some struggling support bounce off of slope support here. If we break lower, by the way, if this thing fails at 26.34, even if I don't get entry and it kind of just rips lower, you'll get an opportunity on the way down. I mean, like I said, next downside target objectively is going to be 24.44 and 24.54. Sort of a decent area there of Fibonacci support, former swing lows as well. Okay, first things first, look for a reaction on this upswing right now if we get into 26.33, 26.34. And that's dollar CAD. Any questions on the loonie heading into the close of the week? All right. Pound yen. This is classic widowmaker moves here. So they call this a dragon for no reason. So here's pound yen. I'll bring your attention to why we were looking at this to begin with, what drew our attention to pound yen from the start. Heading into the start of this week, we highlighted 52.16. A basic 618 retracement from the advance of the entire year. So it's the yearly range. That level this week on the weekly chart converges on the median line. Okay, this is a basic pitchfork off of last year's lows. Basic trendline support. Okay, so it's a modified pitchfork, has that same tone. There's a median line. Acceleration on both sides, support, resistance, or breach, acceleration, support, break, acceleration. Here's where we are. Interestingly enough, and these things don't happen very often, and it's nothing magical about it, but they can sometimes really give you a nice tell. The trigger break that we were looking for, this trigger break was the reversal close that kind of brought the onset of the whole correction this year, right? 3-point, 2-point touch trigger. Here we are checking the underbelly of as resistance as price is checking resistance, right? Interesting. So pound yen's at resistance. We came into the week saying that there was resistance up here. We did rally into it, and we reversed pretty darn nice. Here's what the daily chart looked like. Again, that 618 median line confluence. You also had the high day reversal close for 2017. That was 51.83. So they gave us a range of 51.84 into 52.16. Came right into it. Reversed yesterday and a nice pullback. It failed. Here's an outside day reversal into the highs. Now, you've heard me say this multiple times, for those of you who've been with me for a couple of years. Typically, your outside day reversals are really nice exhaustion patterns. Okay, here's an outside day reversal right off the lows, right? Candle encompasses the previous day's range and closes higher on the session. They're not always going to be that definitive, but they can also be the exhaustion trade. When you get an outside day reversal in the direction of the trend resistance, that can be an exhaustion trade too. So what I'm trying to highlight is this, guys. We have the weekly chart clear. We close above 52.16. That's a different story. Daily chart, well, the outside day reversal, again, Could be an exhaustion in the direction of the trend resistance, which is uptrend resistance. Has me hesitant to do anything here until we close above 52.16. Watch today. Intraday looks like this. You can see how critical that region of resistance is. Even near-term slope, just a parallel of support extended off these highs. A little bit of a pierce there, a little bit of a pierce there. In fact, if we take it off to the actual swing highs, you got a little bit more precision. Okay. And really highlights again 52.16, 51.84 is still the region of resistance, maybe a little bit higher to account for slope. Okay. But the long and short of it is we're not out of the woods as far as pound yen is concerned. You're still trading into resistance on the new high that we've made on the close basis for the 120-minute chart. There is divergence failing to make a new high in the oscillator. So just use caution here. It might be a great entry for another move lower, actually. But the conviction just isn't there. So why don't we drill down in this one real quick, since you guys seem to enjoy this so much, and see if there's anything pressing near term. Jorge says, Mike, well, we'll convince you to go short. That's what I'm looking for right now, my man. So waning momentum, break back below 30. You didn't really 70 rather. You didn't really see so much of a correctionary move lower in near term price. So that's not really that bearish. That's resilience in price actually. Hmm. Yeah, there's just nothing here yet, guys. There's nothing here yet. On whole, you're testing range highs for the week. So Jorge, I try to break it down as much as I can. What I was looking for to see if we have some back and forth oscillation in near-term price on the advance, you can get some slope, right? Some sort of indication to give you guidance on what the gradient is. At this point, this straight shot here, you don't want to fight it. It is range highs, okay, for the week. If we get a little bit more of a convincing waning momentum signature, I mean, it's pretty. These are lower highs, so this is divergence. This is not, right? So the fact that this is kind of dwindling lower here and price is kind of just doing the same, that's not bearish. So there's nothing to fade here yet, in my humble opinion, Jorge. With the same respect, on a long position, I mean, where's your stop? The only place that would actually be like a feasible, really near-term stop would be the last swing low that you made since. And this is deep into the European trade session, but it'd be like 52. Not my style of trading, you know what I'm saying? And you're into resistance, so I'm not going to buy into resistance. But you get the picture. There's really nothing here yet. We'd have to wait for some more convincing close near-term price action. Even if close above 52.16, I wouldn't trust it. Sterling yen is more than capable of a throw over and pullback. And Pooja reflects on some of the comments that we made yesterday. Someone was asking me here in the webinar, you say that sterling is a professionally traded market and throwovers. What does that mean? Again, it's different currencies will tend to have different characteristics of how they trade, what price action does. And sterling yen's notorious just as much as pound is for those throwovers. A break of resistance, false break, and then a pullback, right? A break of support, then a reversal and take you right back through. It's just the nature of the beast. So as opposed to try to explain it, it's just important to recognize that and take that into account when you're trading. Nothing here is screaming short. If you put a pistol to my head right now, I would think you get one last stab or a test of the high before you fail and make another move lower. Don't see that momentum here is ridiculously still constructive. The fact that we're holding these levels though on the pullback in RSI would suggest that things are at least up to par, right? It's not bearish. So we'll have to revisit this. Jorge, does that help you kind of give a little flavor of what we're looking for? I hope that these kind of drills you're finding it helpful. Got it. So in this case, I should look for divergence on the 5 or 10, maybe a reversal bar in the 1 or 2 hour combined with RSI dipping below 6. That's how I would play Jorge. Yeah, absolutely. Excuse me. He says, great. Right on, Jorge. And the thing is, once you get another high in price, so like, let's say we just sit here into the European close, and it's mad boring, and it's just sitting sideways. Once you get that pullback, now you have a high-low high. You can try to extend some pitchforks. You can try to get some slope. And once you get some gradient, an idea of what the slope is to the downside, now we're working. Now we're cooking with gasoline, right? At that point, we get a little bit more excited. But this is just a simple resistance, reversal test of resistance. Could be a perfect failure level. That would be my favored move for this to give you a failure here and a move lower before ultimately breaking higher longer term. But you have to approach those trades with a great amount of respect. And if you do take any fade opportunities on this, guys, super light with the leverage. Just recognize where you are. Again, all things held constant. Gun to my head. I kind of want to be short off these levels. Just don't see the conviction in price just yet. Okay? Jorge says, great. Right on, man. Cheers. Okay, so that is sterling yen, rather. Euro yen number 9 looks like this. Another one that was a real snooze fest this week. The play was to the upside into 132.19, 132.10. I think 10.20 was the level that we had highlighted as the big resistance as this thing was opening the week. Again, the long play was into this region. Anything beyond this is nothing for me. I didn't have anything on it. So we did break higher. Said bullish invalidation. It's 31.76. If you get the pullback, you want to see former slope resistance hold as support. You want to see former swing highs, again, defended as support. So here's the rebound. I'm inclined to think this holds. But again, here's the daily charts look like for Euro Yen. I don't like that yesterday we pivoted and closed back below the 200-day moving average. Okay, this is a nice confluence region. This is the reason, excuse me, I'm losing my voice. This is the reason early in the week we were saying, watch that as the final target and look for a reaction there, right? Yeah, 38.2 retracement, the November low day close from last year, 200-day moving average, upper median line parallel, all was right there. Yesterday's reversal and close below it, I don't know what to do with that. It's still testing the former resistance as support, so I guess we can't get bearish yet. But at the same time, the weekly range is straddling a pretty critical pivot in price. So momentum, 60 failure. It's interesting on this, guys. Again, Euro's just washy here. All things held constant, it's still constructive above 31.76. Topside targets unchanged, 32.44. 32.85 on the 100% extension would be pretty sweet. If momentum is fizzling out, but the price is moving sideways, i.e. with sterling yen, divergence may not mean a pullback. Is this right? So Chen, first of all, first thing I want to say to you, just as a word of caution, is divergence never means necessarily pullback. It means markets are vulnerable for a pullback. It's very important that we distinguish that. So, right, something can show divergence for a week, a month, a year before it finally materializes. Just tells you when price is vulnerable. When price is moving, you're asking when momentum is fizzling out, but price is moving sideways. Yeah, like in pound yen. You don't want to take, I think this is what your question is, you don't want to take those divergence signals too strongly. Does that kind of clarify your question? It doesn't mean that it refutes the pullback, Chen. It's just that means that, price is just not seeing that type of clarity, so it's not likely to materialize into it. Divergence is divergence, you know what I mean? So if you see it there, it's there. But certainly when the momentum signature, remember this, Chen. I guess I'll backtrack everything I just said with this one thing. The closer the divergence signals are to 50, the stronger they may be. So while divergence while the RSI signature may be well respected within the middle here, which is kind of like not bullish, not bearish, when divergence happens in the mid range, closer to 50, those are technically strong signals. So I wouldn't necessarily say that price, the momentum fizzling out as price goes sideways. More so when price goes sideways, that's fizzling out as momentum is unable to really give you conviction on any extreme on both sides. I hope I didn't just completely confuse anyone. So Shen, I hope that helps add a little color. Give me some feedback on that if you may. All right. Dollar yen, number 8. And then let's finally jump into, we did euro. We'll jump into your questions. He says, yes, thanks, exclamation point. Right on, Chen. Feel free to point out examples in price like that. I'll be more than happy. This one is a stretch into the resistance range. Watch. Okay, because if you do breach here, you've got to respect a rally towards 52.86. Dollar yen. Nothing really to say here except the fact that we are still holding within the confines of the weekly opening range, and it's just been a sideways lateral. Try saying that 3 times fast. Game in this ever since. You know what I mean? You got that topside break of the descending channel that we were watching for the last couple of weeks. There's the break, test of support, and now you've been stuck in this range. Okay, you can, you can assume a near-term consolidation play, but I wouldn't get crazy about it. But here's what it looks like. Right? So on an objective break to the downside, that range measure move, I actually tested. It comes out kind of close to that 108 level already, which is the 100% extension from the advance off the lows. So the breakout target's pretty clean here if we do break higher. In dollar yen, again, keeping in mind, where dollar yen is trading. Remember, the 107.50, 107.80 levels are still sort of the big levels to watch for resistance. Here and here. I should probably drop this to here for now. Okay, huge on the daily charts. And even for the weekly charts. I mean, the weekly charts does leave a little more room. But just to pivot that multi-month range we were sitting in until the final break this year. It's a pretty big resistance. So immediately still looking for a possible move higher if we break this formation. 107.80, 107.50, both levels of interest on the upside. Questions, comments, concerns? Okay. So that's everything that is on my plate. Let's jump into your questions in the order they came. Amen, was that you with gold first? Or Shen with Aussie Kiwi? Let me do that. So here's Aussie Key, man. I haven't been following this one, so let's take a quick update on where we are in broader price. Basic slope support off 2016. We haven't closed below it yet. Basic downslope support highlights here. Momentum, yeah, it's ugly. Okay. I'd be very cautious here. This is dangerous. Who was asking about this? Shen, this is this scares the heck out of me. Because a lot of people are probably looking long right here. Let's see what near-term price looks like. Okay, let's clean this up. So the clarity of the intraday chart is kind of phenomenal here. So here's actually that same pitchfork that we're looking on the daily charts shown on the 240. You could see again, remarkable divergence. Again, we just went over this, guys. The closer the divergence signals are, reference points to 50, tend to be strong signals. Here's one at 30 and one even above 36. So price action making a lower low on a closed basis. Always bring into a line chart to kind of clear that out. The oscillator making a higher low. Now, technically, this is actually a third reference point of divergence. Here's your first. So low, lower low, lower low, low, higher low, higher low. So the momentum profile does favor exhaustion. I'll tell you that right off the bat. Potential squeeze here. Okay, I'm going to switch this up real quick. These are weekly open resistance is what I'd be looking at first. Converges right on that trend line. Okay. What's this? 786. Don't need that no more. This is the 100 off the high. Okay. This is pretty interesting. Excuse me. Is it sitting at the major trend? I think is what you mean to say, Jorge. Major trend line support coming from the April 2050. I do think so. Wait a minute. Yeah, from the April 2016, September 2016. We're probing that now. You're talking about April 2016. 2015. Let me see what you're talking about here. Okay, so you're looking at. So that trend line gives you a little more room, I think, before you're there. You know what I mean? That gives you a little more room to the downside. Who was asking about the trend line? Jorge. So that one you haven't really necessarily touched just yet. But I've been working with this purple one just because the parallel has actually been a very decent pivot in price. Okay, especially this year, and it's a basic support touch off the last swing low. So you can see that was actually a third touch that we got back on the 9th. So if we don't close below it today, it's still in play. Okay. Is it worth trading a false breakout or waiting for the daily close, perhaps, Shen? So probably best to get a reversal confirmation to the upside, right? Yeah, Jorge, you answered Shen's question there, and I do completely agree with you. So look, I have to be conscious of my moral obligation to you guys to really encourage habits that are sound and always have risk tolerance as paramount, right? Your capital preservation is above everything, but sometimes you just need to have no guts, no glory, right? So yeah, I do like a long from here. It would be against this. It would be against the lows essentially. Your first level of support of resistance that you have to keep in mind is your objective weekly open, your objective weekly opening range highs, and trendline resistance. That all gathers right here. So you're not too far. If you're okay with a 1-to-1 risk to reward ratio, that's fine. Keep your position light. That's the play. At the end of the day, downside break beyond here, especially with the momentum divergence you've been getting, would see, in my opinion, a larger washout towards 103.70, 103.50. Huge cluster of regions there. Okay. 1618 extension, 200% measured move, 2017 low day close. It's all there. So levels are clear. This is your world right now. The weekly opening range is preserved. I call that a false break of the weekly opening range with the recovery that we're seeing here now on divergence. Let's delve in a little bit deeper here. So there was actually just a perfect resistance trigger break right here. So that would have been your long issue signal right there, right? Even if you caught it at 105, your stop is against 104.87. You're talking about like 15 pips. You look to pay the upside. We just ain't got no slope. Hey, there you go. What time is this? This is 8 this morning. I mean, look, it's just a lateral pivot in price. I don't want to get crazy about it, but there's the high, swing, break, support, support, up, median line resistance. Should mean parallel support. Okay, and on the immediate decline. $618 puts topside target on the advance somewhere around here. Okay. Who is it? Shen? Does that help? On Aussie Key. Again, I'm just looking at this for the first time. I actually haven't been following this trade for months. But with what the weekly charts are doing, what the daily charts doing, I think it's worth keeping an eye on these days. That's the trend line you're talking about. I had that on the weekly chart. Okay, that puts you still, you got a little more room to the downside to go. Actually, we're watching this slope too. Why don't we clean this up? See the 50 lines right there, touched perfect support there, perfect support last week. Watch the close. But yeah, I'm thinking you start to see a little bit of an exhaustion push into one of these two regions. So I think you're on the right track. The exact entry on playing your reversal is not a science. You're going to have to wait it out to try to get aggressive on it. But if you're looking for a near-term opportunity on the scalp, it's a nice formation. I kind of just keep an eye on near-term. Okay. Very helpful. Thanks. The purple trend line is the one I have, the 4-hour close below it. Okay. Okay, this one. I think that's just there because it's not snapped. There we go. You had that it did close below it, 60-minute close. Okay, it's not the end of the world for a 60-minute close, but you could see the pivot. You can see the pivot. So hope that helps there. On the 60-minute chart, where would you call it bearish invalidation? 105.54? Yeah, 100%. Okay, Jorge, 100%. That's your basic trend line resistance for the consolidation pattern that you're in. More importantly, Jorge, try to keep as objective as possible, man. At the end of the day, it's your weekly open resistance. The weekly opening range high is just higher. So maybe stretch it into 105.60, but you're basically looking at the key region here that'll shift the focus higher. Make sense? He says, perfecto. Right on, my man. Cheers. Cheers to you as well, sir. Okay. I don't want to miss Puja's Euro Yen, and first is Iman's Gold. So Puja, I'm going to write that down. Euro Aussie, right? Okay. Gold, Iman, here's what it looks like. This is 9, gold is 10, Euro Aussie will be 11. Here's what gold looks like. So this thing is wicked. Let me tell you, I did not see that coming yesterday with this thing. We talked about 1354, 1355. Someone here mentioned in the webinar they had saw zero hedge, or someone right about the fact that gold was coming into resistance, and I happen to agree with that. That resistance that we were looking at was this channel resistance, 3-point touch. You know, what do you want to call that? Invalidation? I wouldn't say so. We were testing that yesterday during the webinar. It looks like, you know, just higher. We had 1354, 1355, and that's kind of what I was looking for this thing to fizzle out. We plowed higher, turned just pips ahead of the 2016 high close, and then we closed dramatically lower. We're pushing dramatically lower at this point. Yeah, this thing's wicked. I do not have a near-term setup that is anywhere near compelling. You have to say that's a throwover at this point. I don't think anyone's going to dispute that. Eman, let me know what you're looking to do with this. It's coming off of basically range highs for the year. We can't, underestimate. Let's just get rid of these slopes altogether now. That this thing, since the start of the year, has still held the yearly range. It's all it's done. That's all it's done. So should we be crazy surprised that it's turning lower? No. Am I surprised by the breadth, width, and extent of which it's turned? I'd have to say yes. But you're simply still in the yearly range. Not only the yearly range, guys, all of this still in the January range. This whole year, we're trading within January's initial range. That's it. I can't get excited. I can't get excited about it. Sell at resistance, buy at support, and call it a day. There's really, you know, here's the weekly charts. And if you feel frustration in my voice, it's warranted because I've been waiting for gold to make a move since the start of the year. Okay, the pullback and reversal off of the 2018 open at 1302, I thought was brilliant. I thought this was the most amazing reversal off a yearly open I'd seen in years, and I was looking for this thing to rip higher. It's been a slow grind. This was our chance, and that's utter failure at this point, right? So there's no point in trying to force a longer term trade. Now, if you're looking for something scalp, something real near term for gold, I would still say sell a rally below 2018 high day close 1348 if you get another tag again. But largely speaking, guys, it's not a favorite setup for me at all. There's nothing clean about this besides the fact that you're trading within the yearly range. Looking to close my trade, which is since 2016 at 1207. In gold? E-man? So you're short gold. Okay, you're long. So why would you be looking at 1207 to close your position if you're long? Maybe I'm not misunderstanding it. Or is that what your entry was? Okay. I think I'm getting you right here. Yes, my entry. Okay. I thought that was your target. I was like, what? That's okay. 1207. Yes. Oh, so you're playing with the house's money for years now. Look, I love gold to the upside. If you see all my longer term forecasts, always talk about any downside correction that you've been seeing since the breakout that we saw in mid 2017 is correctionary. Okay. And I still think that's how I feel about this trade. You broke the 2011 ultimate record high trendline resistance, which had seen multiple tests since that. Okay. Same slope off that high. We were looking all through that last year. The break really, fueled a really nice accelerated move higher. 1207. Yeah, I mean, I'm not a guy who holds positions for that long, you man. You know what I mean? So I don't want to sway you one way or the other. I can tell you that, the levels are pretty good. I mean, you have a hefty gain here. All I can tell you is if you break below 1302, specifically 1285, okay, this is the 52-week moving average, 618 retracement of this year's range. It would necessitate a break of the pivot and of the yearly open. That's my line in the sand. That would see 1244. You'd be giving up basically $100, over $100 in gains if you were waiting for that. So the only thing I can tell you on such a long-term position like that is watch a break of the yearly opening range. For you, it really will be important because a downside break of the yearly opening range could see this thing at 1244 again. I don't know if you're willing to take all that pain. But with the same respect, if we do finally breach higher, which ultimately I do think this is still a constructive outlook trade, you could see 1450, 1485 before this thing even blinks. Okay, man. So again, not my style to go such long term, but that would be my, touching it with a 10-foot pole. That's kind of what I would be, just my take on things. I hope that offers some color. But I don't think there's anything immediate in this week's price action per se that should necessarily prompt anything for a long-term position like that. So that's gold. Pooja, we're over on time, but a promise is a promise, and I will show you Euro Oz. Let's take a look at that on Euro Oz. I'm off from Daily FX today, so we can go a little over 16, 60, 17, 59, 50. Okay, this is interesting here. You'll recall we were looking at the 100% extension from the advance off last year's low, but it's also the 786 off 2015 high. Okay. I just chipped off a bit, but I'm losing patience with it, says Pooja. You're holding small short off 59.70. Okay, I love the region that you're trading against. I love the fact the momentum signature has continued to show divergence since last year. Since last year, every single subsequent high here has failed to make a new high in momentum. Okay, so really nice. Former momentum support trigger break, resistance. Again, even on these last two highs, looks pretty decent for the turnaround. This looks nice. Thanks for bringing this up. Euro Oz. Let's see what this looks like on the near term. Okay, I actually want to keep both of these slopes on. I want to see what this looks like. Okay, they all come at the same spot. All right, so the advance off the lows that we made for January, basically this is the 2018 retracement that you're looking here. Let me make this darker. It's the 2018 retracement for the range. The 38.2 and basic slope parallel, or parallel support, whatever you want to call it, actually comes down here. Okay, so this was a measured move from the 100% decline off this decline, but now that we've made this bump, right, new low and a subsequent high, I'm going to take this extension down to the new reference points. See if anything interesting comes up. 618, it's going to be right there still. Yeah. March range retracement. There's the 50 break. The 618 is going to be right there. Okay, that makes sense. Perfect. So look, these are the levels I'd be looking at, Pooja, if you're trading this near term. 618 retracement for the advance. So this is the March range, okay, just an objective monthly range retracement. Converges right on the median line for what we're watching, what we just added that. So that'd be your first sort of soft target of support. Bigger level of significance would be down there. Initial resistance, look, you're in from where? 59 what? 59.70. Yeah. So look, I'd have a break-even stop on that anyway at this point. Really weird head and shoulders. Maybe, Jorge, does it look like it's sitting on the neckline of a head and shoulders pattern starting from mid-April? There's a couple different ways you can interpret this. I don't know if you're talking about this real near-term stuff, but I wouldn't necessarily look from mid-April. It could be head left or left head, right shoulder. That would put the neckline right here. That's from mid-March, not mid-April. So left head, this would be the right, not this. Lopsided head and shoulders. Typically, the shoulders are going to be asymmetric when they're actually a decent signal. And there's the break. So yeah, that would suggest plenty of downside to go. Look, just to be safe, stop at break even would be against today's opening range high for the US. It would be against slope resistance. Broader bearish inval, I think you'd have to get, I think you'd have to get back above 160 for that to happen. Does that help? Jorge says mid-March. Okay, so you are looking at the one from mid-March. Yeah. This is too tight. Yeah, the one from mid-March, I do think, could be construed as such, and this would be the break of the neckline, but we'd have to maintain a close below this. Also, this would be a break of the weekly opening range. I'd want to see acceleration, 58.40, 57.95, first targets on the downside. Okay. Pooja, does that help? Does that offer some clarity? Wow, this is probably the longest I've gone over, but I want to give you your money's worth. So, guys, we'll wrap it up here, and we'll pick things up back on Monday. Will be the final daily FX webinar I'll be doing for a couple of weeks. You guys know I'm traveling through Asia Pacific. Starting next Thursday, I'll be traveling to Australia and then Hong Kong. So the webinars here on SB will be affected. I will keep you updated. I'm not sure what the conditions are when I get there. So as it stands for next week, we will be live here Monday on Daily FX, Tuesday and Wednesday here on SB. After Wednesday, I'll be taking off. Like I said, when I touch down in Australia, I'll touch base with Jamie and you guys. We'll kind of play it from there. So bear with us over the next couple of weeks. The webinar series for the intraday may be a little sparse, but Jamie's going to pick it up with some extra webinars as well, and we'll always keep you updated as always on SB Squawk. Guys, if there are other questions, we'll wrap it up here. No, Pooja, there's no Foundations webinar tomorrow. Foundations webinars won't actually be back until I return from Asia Pac, so probably like late June, early July. Okay, thanks. Jorge, still have a couple more days, so I'll see you all of next week before we head off. But guys, have a great weekend. Event risk is pretty limited, so just watch price. Things are likely going to get really nice as we get to the weekly closes they've been for the last couple of weeks. So good luck, guys. Have a great weekend. Cheers.